to the topic of the discussion and hit the issues you typically find reluctant. Remove the facade to fill the gap with some substance. We undermining problems, expecting to overcome it. Please hold the applause. We doing it for the cause. People follow culture before they follow the laws. We rather face the friction and not attempt it at all. Persistence will find solutions once our contentment dissolves. There's a hard pill to swallow for anyone breathing, both for folks who stay woke and those who be dreaming. We ain't slaves, yet we still ain't experienced freedom. What we need is the keys to access the kingdom. We're all in this fallen world trying to stay intact. I'm just a beggar pointing you out to where the bread is at. So follow the breadcrumbs like Hansel and Gretel. Thank Yogi Bear and the thought engineer for that on
Man Talk Mondays. Yes, I know it's not Monday, ladies and gentlemen. I know it's not
Can we just man talk? Can we just man talk?
It is a Wednesday, but we had to come on for a special show. I'm Derek, the Thought Engineer, here with my man, comedian John Yoga. How you doing?
Man, I am on vacation. I'm doing well.
Me too, man. Enjoying it too, brother. Yes.
Yes.
Shout out to all of my vacationers. My vacationers this week. Shout out to all y'all. Hope y'all getting y'all rest and relaxation. But I let you all know, as I always do, this is Man Talk Mondays. It's an open forum where we talk about everything from religion to politics to relationships. But of course, we're doing it from a man's perspective. Keep in mind, this is not just for men, especially this show. We want everybody to participate, join in, men, women, boys, and girls. We want to hear from you, especially if you have questions tonight. All right. So how you do this, you just go in the comments, drop your comment, drop your question. And I think you're going to have some questions. So go into there. That's how you chat with us. That's how you talk to us. We can see your comments. That's how you participate in the conversations. But by all means, if you have a question or comment, make sure you talk to us. Pastor Sam is on. Thank you for joining us tonight, Pastor. You might want to tell all your people that have little businesses in the church, they might want to tune in too. So you might need to send out a quick text message to your people. So, all right. Don't forget, subscribe to our podcast. All right. Like, share, subscribe. We do have our podcast. It's available on Apple, Google, Spotify, Spreaker, all that different type of stuff. You want to go and check us out. Check out our podcast. All right, we're going to put this one up as well so you can go back and check it out. If you just need more information, you can check it out at that time. But you definitely want to make sure you go back and check this out. All right, this is the special edition Man Talk Mondays. Special edition Man Talk Mondays.
They don't understand. We had said we weren't coming back on to next year. You know how special this got to be for us to say, hey, we got to get this out to the people. Because you said that, I was like, man, they ain't going to listen no way. But we going to see. We going to see.
Yes. We interrupted our vacation.
I was on vacation.
We interrupted our vacation to bring you guys this important news because we don't think everybody caught it. Let me tell you what happened. So I was going through looking at TikTok videos, which I do from time to time, and I came across this video that was particularly concerning to me. So I'm gonna show you the video so you can get a sense of what I'm talking about. So here's the video. Has an expletive in there. For all my church people, don't faint.
They done heard cursing before. They
probably do a lot of it, but then they act like in church, like, okay, that's the whole other thing. But,
see, I didn't say
that. So here's the video, and then we'll discuss.
So much for that side hustle. Hey, guys. Breaking news. For the people who don't pay attention, did you know that starting on January 1st, our sneaky little politicians snuck this one in on us? It's a new tax law. It's going through the IRS, and they just love it because, yeah, as of January 1st, they're going to start issuing 1099Ks. What is that, you say? Well, that's the same thing as income. Yeah, it's like a W-2 almost. Yeah, so basically, if you take in over $600 on Cash App, Venmo, PayPal, or Zelle, any of those apps, it's considered income. Here's the real stick in the ass. You go out, you buy yourself a nice couch. 6 months later, you see one you really like, and you buy that couch and sell your old couch on Zelle for like $600. Well, guess what? Whether you sold it for $10 or $50 or $600, and you use one of those stupid apps instead of getting cash, that's now considered income. Wait a minute. You weren't allowed to write off your couch as a business expense to start with, were you? No, you weren't. That's how they're gonna you. All right, lots more coming in. Today's a busy day. Yeah, still in the woods, guys. Still in the woods. Until the next time, stay safe, have a great day, and we'll see you when we see you. Bye-bye. So much for that side hustle.
All right.
Hey, guys.
All right.
I got a question. Okay, go. You want to bring? We can bring on.
Yeah.
Okay.
So in cases like this, if there's anything involving taxes, I call my good friend, Mr. Nathan Ferguson, who is a certified public accountant. He's the real deal, Mr. Nathan Ferguson. Thank you for joining us tonight, sir. We appreciate you, and I'm pretty sure after this talk, I think the people out there will appreciate you as well.
No worries about it. No worries. Still in the woods.
Hey, man.
In the woods.
Good.
I got a question.
Mm-hmm.
So I just kind of caught this part of it. He said after $600, they'll be reporting everything after that. Is that so? Would that be all of the third party entities together, or just one? Just if you got to be over 600 on each one of them, or because I'm thinking as I thought about, it, I'm like, because if they do all together, man, we're gonna be in some trouble.
Oh, absolutely. Yeah, that video was right dead spot on. Actually, yeah, that 1099K has always been around. It's a new reporting law that they just starting actually on January the 1st, as he stated in 2022. The current law right now states that when you use a third-party payment servicer, such as he said it invest in that platform, those Cash App, Zelle, things of that sort. The current law that's currently been in effect for many, many years is as long as you didn't cross the threshold of $20,000 and go over 200 transactions, then it wasn't reported by that third-party servicer organization. However, he's absolutely right. Starting on January the 1st of 2022, any and pretty much all reportable transactions, just like that guy said in the video, $600 or more. That means collectively. It doesn't mean you turn around and do a $400 transaction on January 4th and in February do another transaction for $300 because it's under the $600 threshold. It doesn't work. It's collectively. So any transactions used by those platforms, $600 or more, will be reported to the IRS as an information return and will be included as taxable income on your personal tax.
So let everybody know what we're talking about tonight. So tonight we're talking about the small business killer. And we're going to let you know what we mean by the small business killer. And we're talking about the 2022 tax year. This is something new for the 2022 tax year that you need to be aware of. You got a synopsis real quick from what Nathan was just saying, but we want to really dig into it so you really understand what's going on and why we call it the small business killer. We're going to explain that in a minute. But a lot of people over the pandemic, they started their side hustles. They started opening new businesses, small businesses, doing things to try to supplement income. And they got on their hustle, you know what I'm saying? Trying to do things to earn money. Well, the government has now, they want that money to be taxed. Your side hustle will be taxed. All right. So we want y'all to understand what's going on and how this thing is going down. John.
Well, and again, the question I was asking, man, do you know how easy it's gonna be to go over $600 if you use all three of them? If you use, I mean, think about it, because I don't know why I was thinking for each one, you know, the Cash App, because we use Cash App and I don't even think twice about it. If I'm at a restaurant with somebody and we want one check, I just pay somebody whatever it is on my Cash App, among other things. I don't even think about and see, this bothers me. If my son who lives with me and I charge him rent to stay here because he old and antique and need to be out of here. But that's beside the point. It's not about me. So if I charge him rent and he pays me with Cash App, they can. So you saying they can tax that money that I get from him let's say if it's $100 a month, that $1,200, everything after that $6 will be added to my my income.
Everything, not after $6, it's all collectively all together. So if you receive $1,200, it's anything $600 or more is reportable. So that's when that's the requirement that they have to report collectively. So the whole idea is that it should only impact businesses. That's the whole idea. However, it can impact individuals too. So the question everybody's been asking, well, if I have a Cash App or a Zelle and it's a personal account and it's not my business account, will it be affected? And that's where it's going to get into the commingling. The law IRS just clearly states $600 or more when you're running reportable transactions through a third-party service organization. So what's going to depend on each individual that uses these platforms, Zelle and Cash App, especially for businesses too, but also personal too, they're going to have to determine, and I imagine they're going to have to break out what's personal and what's actually business, So that's going to be the big distinction there. And of course, as anybody, I would imagine, being a third-party servicer, if they can't really understand the difference between the business and the personal transaction, more likely they're going to probably just report it off across that threshold. So
yeah, because they weren't sitting at dinner with you when everybody was at dinner and one person paid and everybody else cash tapped them. They weren't sitting at the dinner. And I think that's the dangerous thing, because the burden of proof is on the person and not the people that's saying who's deciding whether this is business or personal. Right? Pastor Sam says, what loophole are they trying to close?
That is a good question. I think the loophole they're trying to close is individuals, specifically businesses that were using these transactions. As Derek just mentioned, a lot of people had businesses. They started a business during the pandemic. And given the current law clearly states that if it's $20,000 in a year in that transaction and $200 transactions or less. So if you can go above 20,000, so you can make $100,000 running that Square, running that Zelle, things of that sort for your business. But if you went underneath that 200 transaction threshold a year, it never got reported to the IRS. So it was a self-report by the personal business. However, now that the IRS is going to know, given that the threshold now is lower, they're going to know exactly how much money you actually received in that year. And then it's going to, it lowers the risk from businesses trying to underreport their income. And hence the IRS is going to get more taxable income, and the businesses and individuals going to have to pay a lot more in income taxes now. So.
Yeah, because if you report and you made $35,000 last year, well, if you report you made $35,000 and the IRS can see where you made another 25 on here, they're gonna. So when you do your taxes, how are they gonna do that with the taxes when you do?
Well, and under the current law, let's say, for example, now what's currently in place. Let's say you turn around, give my example, you made $100,000, right? But you made $100,000 only out of 50 transaction swipe, right? So out of 100,000, let's say, God willing, I mean, they just like, you know what? I didn't report the 100,000. I only reported $60,000 that made it. The IRS ain't gonna know about that $40,000 difference. So now, because you made $100,000 over that $600 threshold, IRS is going to know you made $100,000, or we want.
And we want it we want it taxable.
They're going. So it closes the report. It's basically the IRS is going to know. It closes the gap on the reporting of how much you actually made through a third-party servicer, such as those apps, for business. It's the whole idea is for the transactions of goods and services. So it's targeted specifically for businesses, and obviously individuals can still run a business in their own name. So that's where the apps, not the businesses, the third-party service organization, such as Zelle and things of that sort, they're going to have to really clearly identify, is this money I'm giving an individual just for a reimbursement? Am I just giving a gift, or is this actually money that an individual receiving for baking or doing hair, some kind of service out of their house or wherever they may be. So that's where that connection is going to have to be clear. So that way the third party service organization knows exactly what to report to the IRS and to give to you for your income tax filing.
So if Aisha's in the kitchen
Mm-hmm.
cooking more than some rice in there on the back of somebody's head,
Oh yeah,
and you've been paying her with PayPal or not
Mm-hmm.
PayPal, but Cash App and all that.
Mm-hmm.
Now they have a way to keep up with what she's doing.
yeah, more likely, and that's why depending on whoever's paying Aisha, obviously if she has a personal account or depends if she has a business account, more, and that's the bit depending on how they're going to set these things up moving 2022. But more likely, if they're paying her out, and let's say she just does a couple people's hair a month and it grows and she makes $20,000 a year, didn't think nothing of it over the years. That's what she's been doing. It never reported it out, and she moved on with life. However, starting in 2022, when she's going to get a tax 1099K in early of 2023, saying, "Hey, Aisha, you made $20,000 that ran through this payment here through your account, and it's obviously over $600 more needs to be included on your income tax return."
All right. So the guy in the video mentioned the 1099K. Can you talk about what this 1099K is so people can understand?
Yeah, a 1099K is basically information return. So the third-party service organization, i.e. Zelle and Cash App, all of those are what's technically called third-party service or payment processor networks. So basically, they're a third-party company in the transaction between customer and client. They're the ones that's processing these debit and credit cards, and then obviously they take their fee, and then the business owner itself will get whatever's left over on those business proceeds. So those entities itself will be collecting all the data. Obviously, they have all those transactions. At the end of the year, they're going to say, okay, Jane Doe, who you own this baking company here, that you went over whatever the $600 more threshold, you made $20,000 for this year. They're going to report it out to the IRS that we processed for Jane Doe's company $20,000. Report to the IRS, and they're going to give a 1099K to Jane Doe so she can file it on her tax return.
Jane Doe barely getting by, man. You can't do that to her. She barely getting by.
Hey,
Jane Doe trying to feed
starting on January 1, 2022. It's a new day only in regards to the new reporting requirement for third-party processing payment. So,
but everybody go through that. Everybody does that, Nathan. Everybody does that. I mean think about this. How many people do it without even thinking about it?
Absolutely. That's a good thing. But, that's why I believe they closed the loophole in order to get a true picture of what individuals are receiving and businesses are receiving as payment. Hence, that way they know exactly how much to tax them.
Well, let me tell everybody real quick, because I know a lot of people that are listening right now. You got friends, yourself, or somebody you know is operating with a side hustle. They got their side hustle going. If you know somebody who has a side hustle or something like that, please share this right now. Send it to them. Let them know right now they need to tune in because they need this information.
Black people, that's the only way we survive. We got to have a side hustle. We can't make it
targeted.
We can't make it. Hey man, listen. Okay, because most of the time we can't really afford to do business like we really need to do it. So we have to have a side hustle or something till we get our money up. And then we'll start doing right eventually. Hey, black people, eventually we'll do right. But right now, Nate, you can't take the side hustle. I'm gonna just tell you right now. Okay, we gotta do something. We can't take the side hustle.
Think about this. Think about this. Like you said, people trying to get ahead. And so they start taking on these new ventures. I'm gonna do crafts. I'm gonna sell this. I'm gonna sell that. I'm gonna start offering something as a service or a business or something. Everybody want a business, right? Right. I'm the CEO of making bracelets. You know what I'm saying? But you the CEO. But so, but here's the thing. Now the IRS want they cut. They want they cut, and they coming for you because of the convenience factor. It's the convenience factor that people are not accounting. There's a reason why people use what we call third-party servicers, which are Cash App, and Zelle counts as well. Just because Zelle seems like it's part of Bank of America, you got to keep in mind, this is not Bank of America. This is a third-party thing that Bank of America has introduced. but it does count. So you got to keep that in mind.
Okay, so if I make an extra $10,000, if I make an extra $10,000, and they think that's I had a small business doing it, how are they going to tax me? Are they going to tax me the regular 8.5%, or they going to tax me?
No, what happens is depending on how the business is set up. So if you're just a sole proprietor and you made, like you said, an extra $10,000 and you get that 1099K, so you'll file on your Schedule C on your tax return and obviously write off any deductions that you have. So let's say in your example you made $10,000, you only had $2,000 in deductions to take off of that, so you netted $8,000. So part of that, you have to pay what's called self-employment tax on that $8,000 profit. Self-employment tax on the profits for the business. So you pay self-employment tax on that $8,000 in that example. And in addition, that $8,000 goes into the bigger pot of your taxable income. So say, for example, you made $50,000. Let's say you had another, this was your side hustle, you had $10,000. You had a regular job, made $50,000. Your wife had another job, made $50,000. So together y'all made $100,000. But keep in mind that $8,000 goes in the bigger pot now. So you had $108,000 of potential taxable income, and then obviously everything else gets deducted. So your essence, you're actually paying a self-employment tax, which is that tax on that profit, and you're increasing your taxable income, which hence could project you in a higher tax bracket too.
Oh, wow. The higher tax bracket means the percentage you pay goes up.
Yep. So you're getting hit by almost you're getting hit by almost two different kind of sets of tax: the self-employment tax, which is one tax, and then obviously the higher the combined taxable income, then obviously you're going to be paying more in taxes too as well. Yeah.
Now, Selena made a comment. She said, for teachers are known for having little side hustles.
Oh, yeah.
Because they go and hit up all the other teacher friends to buy from them. So she said this is great information for teachers who need their side hustle to survive.
Absolutely.
So any teachers, make sure you let your teacher friends know what's going on.
This law, let me just be clear, this law does not discriminate against any industry. It's a system that is in place, that has been in place, and they're actually just moving the reporting limit down. So that way each entity and individual, IRS will know for information purposes, i.e. they know whether you're reporting all the income or not for that particular business or individual business. So
how do we miss this?
Well, again, this came under the American Rescue Plan Act that was passed in March of 2021. A lot of people were focused, hey, I'm looking for the stimulus, I'm looking for the PPP money, I'm looking for, all these different things. But this is a big game changer in the business and individual world, so hence most people may used to running a business, reporting out income and only in their minds having a set amount of taxes. But, this could potentially change the trajectory of how much taxes they can be paying that they're not ready for later down the road. Like, it's taking effect in 2022, but eventually 2023 is when you file your 2022 tax return, which can have a big effect. So the big goal is to understand the tax rule and maybe make different alternatives. If you don't want to use the third-party servicer providers, then have different alternatives of maybe collecting revenue too. What
was the name of that bill again? What was it under?
It was the American Rescue Plan Act, and it was a 2021, and that was passed in, I believe, in March of 2021 when it was passed. And part of this passing was a lot of different laws in there, and obviously this was one of the new tax laws, and it's more of a reporting requirement for the third party. It puts the burden on third party service organization. Again, that's what it says, $600 or more, where the current threshold been for years was 20,000 and 200 transactions. So that means if you go underneath 200 transactions, you can make $200,000. But if you went underneath 200 transactions, it never got reported out to the IRS. So hence it put the business on the self-reporting it on their personal or their business tax return. But now that the requirement is way lower now, pretty much all the information now is going to get reported out if they make $600 or more in a calendar year. So
And this is also known as you're gonna have to go back to work and get a real job.
I mean, this is going. I mean, if you don't plan properly, it is going to put more of the squeeze, like I say, on, because let's just be honest, most small businesses use a lot of these apps and things of that sort. A lot of big businesses, they don't really operate in this kind of realm. You know, they do more, I imagine, bank to bank EFT transfers, or where, you know, a lot of the small businesses, it's like Derek said, it's a convenience factor. So I think where I imagine I probably will see is people going back to not using the third-party servicer payment as much, and they'll probably go back to using cash, check, and things of that sort to reduce the fees, of course, because third-party servicer payment do take fees. So it's almost like a win for them if they go back to cash and check and things of that sort. And it goes back to the business owner or the business partners and things that sort of depend on how the entity is structured, is self-reporting it back out, basically. So
yeah, just like Paula just said. Paula just said, so we're back to receiving cash.
Yeah. If you go that route, but you still can use what you want to use third-party servicer if that's the route you want. But just keep in mind, this new law is going to definitely report everything out $600 or more.
And I think with that new law, man, one thing about that kind of stuff, man, it's always more than what you think it is. Because when you get that invoice, or when you get that note from the tax thing, you're like, wait a minute, I didn't make this much. I don't know. One time we look at our tax and say, yeah, that's about right. Yeah. We always be like, I didn't make this. Who we need to call? And so now, hey, we trying to let everybody know. We try to let everybody know what needs to be done, man. Pay attention to this, guy. This is really big. It might not seem big now, but at the end of 2022, it's going to be really big. Really big.
Yeah, and what I imagine projection is going to be big, like kind of John Derek hit on the head. Business is obviously going to get impacted because you're capturing all transactions if you're going through third-party service. I think individuals, just kind of going back to that example of lady baking a cake at home, or doing hair, and they used to just operate in that kind of realm. Then all of a sudden, they move, boom, get a 1099K next year, comes through the mail. They're not used to seeing it in the mail, maybe discard it, thinking it's junk mail. And then next thing you know it, boom, they get audited, getting hit for underreporting your taxes and hitting you with penalties and interest. So I probably, if I had to project, I would see a lot of audits going to be happening right after this first go around, because folks are not used to operating and getting these 1099Ks, and they're not used to having to see, okay, this is all this income's getting reported, where they may be self-reporting and not might be as accurate. So
Paula has a question. She says, so should small businesses look into getting a merchant account with GOAT or something like that?
Yeah, I mean, that'd be totally up to you all, of course, because like I said, this new law only pertains to the third party service. So if you use any of those platforms, then it's going to get reported out. And I think, like I said, going back, I think folks are going to go back to cash and check and things of that outside of that 1099K reporting requirement. So
and Monique says, when using the third party system, how will you be able to make the difference between paying for a service versus receiving cash? Personal
and that's a great question. And see, thing about the IRS, the way the law is written, they just clearly say $600 or more for goods or services. So it's almost they don't explicitly say personal or business, because people can do business out of their personal account and can co-mingle. You with me? So where I would expect to see is these different platforms should have the breakout, i.e. Zelle or Cash App. I would expect to see the breakout start in 2022. That is this for a service that you're giving this information, or is this for a friend, or is this for a gift, which it should. So those type of items should not be reportable to the IRS. But keep in mind, if there's a lot of commingling going on, and that's where it's going, the burdens, like I said, this new law falls the burden on the third party services organization to structure their framework to make sure they're fitting in the IRS reporting law. IRS just says, hey, anybody you process money $600 or more for good or services, we want to know, and you're obligated to report to us who it is and who you gave it to. Now, with the third-party service organization, going to have to revamp their system on how they're collecting money and how money's being transferred to say, is this personal or is this actually for good or services? And things. So they're going to have to revamp their their clarification so they know exactly how to report out to the IRS.
And don't forget, the burden of proof is on you. It's not on the government.
Mm-hmm.
You have the burden of proof. So where you might be calling it a personal thing, if they're calling it something different, if they're saying it's a business expense,
Right.
you have to prove that.
Yeah.
They're not just gonna take it at face value and say, oh, okay, because you might be trying to get over on them and they don't know. They might just count it. And then now you have to prove that it's actually a personal expense, not a business expense.
Yeah, and that's a good point because, like, kind of going what John said, just say where he said, "Hey, you know, I have somebody paying rent to me, whatnot. You know, it's coming through," and you can say, "Oh, no, that was a gift." If you see transactions happening, usually month after month on a consistent basis and things of that sort, I mean, the IRS has been playing this game a long time, and they kind of know, like, I hear you, it's a gift, but somebody's pretty generous to give you that kind of amount on a consistent basis. Now we're gonna, you know, probably classify that as a, because again, the IRS doesn't define. If you look at read the regulation, they don't define more a personal bit. They just say $600 or more in goods or services. You with me? And then it's gonna be up to the these platforms to kind of define more personal business, you know, transactions.
So Monique says, I believe PayPal has that. So let me ask, because a lot of the third party, they have where you can set up a business account versus a personal account. So should people purposely set up a business account? I mean, how do you do that if you're not active business?
I would highly encourage, if you got personal, you're doing things to personal, you don't want to commingle the two, you know, so you want business to be business and personal to be personal. So that way, if you ever get audited, IRS is going to pull all the records, you know what I mean? Because they can look at all the records. Because what I imagine what happen later down the road, which is going to see, people are going to try to hide from business account and go to personal account and start kind of trying to filter their money that way. And like I said, I'm pretty sure IRS already thought this out all the way. They're going to let people.
Go ahead, Nate. I'm sorry.
Yeah, they're going to let people probably do what they do on the personal side. But again, if you see volumes of transactions, it's going to be able to try to justify, is this really a personal expense? And you be able to justify whoever is, you know, actually receiving it and not a business expense.
So Ben says 600 per transaction or for the year. And I think I got to specify this so people understand what's going on.
$600 is cumulative. That means for the year. So going back to my example earlier, if you have a transaction that's $400, then you have another transaction that's $300, and you have a third transaction that's $200, collectively that's $900. So it goes over that $600 threshold. So $600 or more in that specific year.
Wow. I'm thinking this. If I'm the IRS, now everybody's going to start trying to put stuff through their personal thing rather than the business thing. Absolutely. And let me tell y'all now before y'all call Nate crying. Don't you do it.
Which I think what's going to happen, I think who's going to be really looking at this a lot stronger before it goes to the IRS is the third-party service organizations. Because they're going to have to really kind of look at, like, I understand that's where I think they're going to differentiate the two on the platforms to say, is this a personal transaction or is this a business transaction? But I think, like I said, the burden is going to be on third-party service organizations to clearly identify all the transactions. Because if you do a lot of that in your personal account and they're like, I hear you, that's what you said, but it could be obviously potential to be audited because it could reach over that. You know, you don't run nothing through the business and everything through the personal. They're like, some of this may be questionable, may need to be reported out. But I think that'll be between the individual and that third-party service organization. So,
okay, so this is a good question. What are third-party payment systems? What are they?
Yeah, those are going back to those different platforms or those different entities like Zelle, Cash App. All those are individual entities that provide a service for either business or to individuals. So going back to, let's say I own a baking company, I use Square. You come in as a customer, you come in, buy my cake, you swipe, I turn it in and say, okay, the cake's $10. I take your debit or credit card, swipe it, and then I give you a card back. Square is processing that $10, and then they'll eventually probably give me, let's say, $9 out of 10. They take their dollar fee and give me $9. They are processing on my behalf of my company, my baking company, that transaction. So Square is considered a third-party service organization. So
third party.
Right. So a lot of those different platforms are Zelle, Square. There's a lot of them out there.
And if
I think
if it's not
Vimo.
bank to bank,
Yeah,
if it's
if
not
it's
bank
not
to bank,
right, if you're
yeah,
not really
probably.
wiring it bank to bank, that's
Yeah.
why I say cash, check. Like they still have different requirements that it's more self-reporting. They call it. They used to call it 1099 miscellaneous. Now they call it 1099. I think NEC for like if you're paying contractors and things of that sort. But that you self-report those out, and that's why this whole new rule only affects the third-party service organization that business and individuals receive.
So let me, this is why we call the show the Small Business Killer. And this is why we called it that. Because when we talk about third party, it's a convenience factor, because they've shown that people, if I can do a transaction quicker, people are more apt to come to you. If I got to use a check, I used to hate standing in line behind people that were late because they took forever. So the convenience factor, the third-party servicers add this convenience, which makes it easy for you to get money. Typically, the business takes on the expense of paying the third party. It's not transferred to you. If they do, they hide it in the price of the goods, so you miss it. So what we talking about, when you're doing exchanges on a personal level or a smaller level, then you're using parties like this because that convenience factor makes people come to you more. But here's the thing. Now we looked at this. Nate looked at this. Who does it not affect?
The bank.
If I had to say it doesn't affect as much impact on it, it's probably big businesses.
Yeah.
Yeah.
Big
Big businesses, usually the way, when I go out and audit like I say, big entities, and I see how they're structured, they don't usually use as much, the Square and these platforms, so I'm pretty sure, this was designed, of course, to capture the income, but I would have to say small businesses are probably more affected than the big businesses I usually see do bank-to-bank wire transfers. So.
My friend was telling me it don't affect strip clubs. He said because he have his one, he good. He said he good in there. That's what he said. Now I don't know what they do. I don't know what they do. I don't know.
Yogi, do strippers take cash app? I'm asking for a friend. Yeah. Strippers don't take cash app.
They might upgrade it to Square too a little bit in jail. So who knows that.
It's a cash business. Okay,
yeah, I'm telling you.
All right, Paula says, so is there, so is this their way of getting the stimulus or PPP payments back?
Yeah, I mean, that's a good question. I mean, I don't know if this is the intent of it. All I can say, this is the new law, and obviously folks, business and individuals are probably going to end up, I imagine, projecting paying a lot more taxes than they usually are. So,
so Nate,
whether it was the intent, I couldn't say yeah or nay, but I could say that there's going to be a lot more businesses and individuals paying taxes than normally they did. Probably
Nate is a certified CPA. He can't tell you that. So ask me. Hell yeah, they ain't gonna give you nothing without taking something back.
They coming for theirs, man.
They ain't gonna give you nothing. They're not gonna give you nothing without something coming back on the back end. Matter of fact, it's gonna be more. Cause it's the old debate and switch. If I give you $10, I'm gonna charge you $100 for it. They just like them loan people that charge you $900 because they finna rape y'all. Y'all better pull your pants up.
Now, catch this. Now he told you where they put this law. They put it in this relief bill. They had us distracted by COVID. You were distracted by COVID. All you wanted was some immediate relief. I want my stimulus payment. I want my PPP loan. I want my small business loan. I want all this type of stuff. And in this whole bill, the bill is a stack of pages. In this bill, they slid this in. This is why when I heard the video, I said, I got to check this out to make sure it's right. So I called Nate and he checked it out. He checks this stuff all the time. Now, he stays on top of the tax laws and all this type of stuff. He's like, yeah, man, this is the real deal. So they slid this in. When people start bringing stuff in, it's all in the news. You got to start asking questions about what else is going on, because they slip different things in there without your knowing. And then what if we hadn't done this show? What if Nate hadn't come on this show and talked about this? And you got to the end of 2022, you get 2023 and you get ready to report, and all of a sudden you got this big tax bill at the end.
Mm-hmm.
Well, see, what's so ironic about that, man, is normally when they pay us for doing comedy, they cash app us.
Mm-hmm.
And it could be anywhere from $600 to $2,500 a show that we're getting. And bruh, and I don't know what everybody else do, but hey, everybody ain't reporting that extra $10,000 that they getting doing that. Because you barely making it. And I just couldn't imagine you at the end of the year they're saying, "Oh, did you forget about this 20 that you made?"
Mm-hmm.
I'll be talking about what? Who? You talking about me?
Oh yeah.
That was my cousin. That was my cousin Willie J.
We're gonna put you and your cousin in jail then. Like, Lord, right, Lord, always follow the money. Always follow the money. You gotta follow the money. Absolutely. Absolutely. And the thing that when they come up with laws like this, they're dealing with your habits. People don't understand. They base these things on your habits or even your bad habits, because now they know you're in a repetitively, everybody, you got a rhythm where you use third party all the time, so much that you don't even think about it anymore. You don't even think about it anymore. And now, are you gonna break away from this? Like, what other alternatives do people have to accepting revenue?
Yeah, I would have to say go back to cash is king, or if you don't want to do third-party service organization, cash or checks. Or if you continue to use your third-party service processor, I would highly, highly recommend making estimated tax payments throughout quarterly. So individuals can make estimated tax payments quarterly. So that way, if you think you're going to get hit with a higher bill that instead of you used to paying $5,000, you project it's going to be $10,000, just pay estimated tax payments into the IRS quarterly. So that way, you're kind of setting yourself up not for a huge tax liability at the end of the year. And, obviously if you overpay, you'll get your, whatever your money back is. So.
Or you can just tell your friends, I owe you.
Hey, I told her, I said, people gonna start, the barter system is gonna come back.
This law is definitely a game changer. Like I said, I think it's a big game changer for small businesses. It's going to make, I think, different people how they collect their revenue totally different. Either they're going to do one or two, they're going to do a couple of things. Either they're going to start making estimated tax payments more to pay into the system. Either they're going to start reducing the third-party service and start collecting cash and check from other clients and things of that sort. So, but either way, it's going to make you think on how you process your revenue, and what's actually going to be reported.
Man, it's going to be inconvenient, Nate. It's going to be inconvenient. People don't have cash no more.
Right.
What's that?
I totally get it, but you got to keep in mind now, individuals who are already going over that 20,200 transaction threshold, it's not going to probably impact them that much because they're used to already receiving these 1099Ks. So, but individuals who probably didn't meet that threshold, it's going to probably impact them a whole lot more because they're not used to having probably all this income reporting it. And I'm just being honest, like, I don't know if everybody, not saying everybody who does tax return, hopefully they're doing ethical and honest, but are they reporting it all? If not, then they're going to get hit with, this new form here.
Don't y'all be laundering money now. Don't you're doing the money laundering. Yes.
Yeah. So I think
the barter, I feel like the barter system will probably come back. So that says the barter system is, if I'm a mechanic and I fix your car and you do hair, I say I'll fix your car if you do my wife's hair 3 times.
Oh yeah.
So that's the barter system.
Yeah. So there's no transaction recorded.
There's no transaction. There's things of goods and services. Because you don't need money. You need what money gets you.
Right.
Honestly, really. Money is just a convenient way of doing the transaction. So Janae says, how do you suggest collecting revenue in a virtual dominated field? Most businesses now are online.
Right. Yeah, hence that's why I believe, I mean, I don't know what the rationale changing the law is, but I believe because everything's virtual, most people, I imagine they did the research when they changed this law. I know most people like kind of let Derek and John get to his convenience factor. So I'm pretty sure they got already projection on how much revenue they're going to collect from most people having to report it all out. Because I got a feeling they did it because they probably already saw a huge revenue that was underreported. So this is really, in my mind, a way of collecting revenue, collecting additional taxes. So most people are either going to, say, hey, I'm going to just stick with it and keep to what I know. But I think once they start getting hit with some more higher tax bills that they're used to, I think their habits and ways are going to change and go back to different alternatives.
So Nate, so how would you, in a field that's dominated by online stuff, how do you get around? How can you not get around it? But what are some alternatives to making
It's called
things better?
circumvent.
Yeah.
It's called circumvent.
Yeah. Again, if you don't want this new tax law to be part of it, don't use the system. And what I mean by that is don't participate in third-party service payment as collecting revenue. It's hard to say, well, that's what I use, this is what I do. But keep in mind, then that's what the rules you're accepting when you go down this process. And like I say, most businesses, it's convenience. Most people want Square. Most people do Zelle. Most people do these things. And there's nothing wrong with it, but you just got to be aware of the reporting requirement and what's about to come down the pipeline.
So answer this for me. All right. So Pastor Sam says, what if the government put a trace on how much cash is being used per individual? Let's get to Pastor's question. And I got a question that
right. Now, I don't know if the government, I mean, I can't speak on behalf of the government, but I don't know if one thing about the government, they know how much money is probably in circulation because that's why they have the serial numbers and things of that sort. But tracking how much cash like you do, that's one thing that is hard to track. And that's why they can't control cash because it flows so easily from one pocket to another. And there's no reporting on it. And because there's no really reporting, the only reporting there is on it, for example, I have a contractor come to my house, do some work, and there's $2,000. Contractor charged me $2,000 to do some renovation work. I pay the contractor $2,000. Now it's up to me to get that contractor's information and report to the IRS and give that contractor 1099 miscellaneous. So I'm self-reporting that, hey, I paid this contractor more than $600 or more, which has always been in place, not that 1099K, but 1099 miscellaneous, that I pay this contractor $2,000 for obviously goods or services they can't perform in my house. And that contractor responsible, obviously reporting that $2,000. Do most people do it? Probably absolutely not. There are individuals and companies that do it, but that's how I think people get to underreporting more of their income that it is. But cash has always been free flowing. Cash has always been around. People like cash because there's hardly nothing reported out on cash besides the 1099 miscellaneous I gave examples. So because of that, and most people, how we conduct business is really, if you notice, cash is not a big circulation that way we paid. If you go, I know the McDonald's or go wherever you go out to grocery store, most people don't hardly pay in cash no more. And that's how they know it. And especially you got to look at small businesses. Businesses, they don't really pay in cash no more. They pay out of that debit card, and it's a convenience factor. And hence, we want to know all the income that an individual makes so we can, of course, obviously tax them at whatever highest applicable rate.
See, Big T was on to something. When I went over there and they told me, hey, man, we want cash, they was on to something. To something. And I looked at them like they was crazy. Y'all don't want my card? No.
If you notice, if you imagine people who probably do collect those cash, hopefully, they're reporting out whatever they're supposed to report an obligation. However, again, the government doesn't know. So it's self-reporting how much you collected. And obviously, if you take the control away and if you're giving it to me and having to do it, then obviously I get to almost control my outcome of what my taxable rate is going to be.
All right. So Pastor, what if you cash a check and pay someone? I think when we talk about cash and we talk about checks, we're talking about direct transactions through the bank. Now, if the bank start reporting all your transactions, you're in trouble.
Right.
So let me ask this question. This has just hit me. What about nonprofits that use third-party services to collect offerings and different
that's a great question. Now that it's still, like I say, it doesn't no entity is exempt from using this third-party service organization. So going back to the example, churches that are using these third-party service organizations, the third-party service is still obligated if they go over those thresholds to report it out. Now, depending on the third-party servicer, they have to, if it's like a church, churches are exempt from doing personal tax returns. You with me? So what they'll still get at the end of the year, if they went over, let's say going back into current tax laws, $20,000 and 200, and let's say they collected $30,000 and 250 transactions, they get a 1099K every year. It's an information purposes, but it's just what it is just report out to the IRS that they made that much money, they collected that much money, but it's just for information purposes because churches are tax exempt. They don't have to do a tax return. But then you have other nonprofits that are required to file a tax return annual, even though they're not paying taxes. So they would take that 1099K and put it on their tax return and obviously report it out to the IRS. Because keep in mind, the third-party servicers is probably maybe one way of they collect the revenue. They could have collected revenue from membership dues. They could have collected revenue from fundraisers. So there's different ways a business or entity can collect revenue, and that's just a way of collecting revenue. It doesn't discriminate for profit, not for profit. It just depends. Like I say, all these third-party service organization is collecting money and reporting out to the IRS, and it's up to a personal, individual, or the nonprofit if they require by law to file annual tax return to report it on their tax return too. So,
because it's been studies have proven that the convenience factor increases your revenue by a certain percentage, like a huge percentage. If people can just go to their phones and send you money, especially if you're an organization or a business or something, it increases how many people probably do business with you. But now, like I said, now the government is saying, okay, we want our share too.
So basically, in my mind, it's more of a monitoring tool now, and they know where earlier they didn't know, from basically up to now, 2021. But starting in 2022, moving forward, they're going to know. So then, the more they know how to come back and give you a little letter if you underreport and adjust the taxes, and hence that'll probably come with penalties and interest too. So
there ain't nothing more scarier than seeing a letter with IRS on it.
Yeah.
And it ain't tax time.
Oh, yeah.
Tax time.
You feel your pockets getting light every time you
Because keep in mind, the IRS already knows from employers, and this is just another information. They already know before you fill out your tax return, the information is already reported to the IRS. Your W-2s are reported. This is the information that's already reported out. So they already know who reported it, what's a report, and they're just waiting on you, or you're prepared when you file your tax return. When you report it out, does it match their records? And if it doesn't match their records, that's when you get a little sweet, little nice letter in the mail saying, hey, you reported the taxable income this. However, we received, and they'll know exactly how much it is, who sent it in, and if you were supposed to, you might claim, hey, we made $100,000. Like, it was actually 120, and you might have only paid $5,000 when you should have paid $7,000. In addition, that $2,000 taxes that we owe, we're going to charge you penalties and interest from the day of April 15th from when you originally owed. So again, time works on their side, not on your side.
So it's like your spouse, they catch you cheating. When they ask what you've been doing, they already know.
Hey, you better be a good spouse. You better.
They're just trying to see if you're gonna be honest about it. And if you lie, the penalty will come.
You better be a good spouse and don't do it, man. This thing. Be truthful from the beginning, man. You ain't got nothing to hide.
Just be truthful.
Just
be faithful.
Nah.
Don't be faithful.
Yeah, you have to catch me.
Now, so let me say this and just kind of put it in the frame, right mind frame for people. When we say the small business killer, this is what we're saying. Most people don't take on new ventures because it's too troublesome. It's too much to do. And when you add an extra step, then more people are discouraged from starting their own thing, from doing their own thing. We're not trying to discourage people. We just want you to be aware of what the current play is. So when you start a business, or even if you're in business, you know what's going on. This is not to discourage people. Now, the reason why we call it the small business killer, because big business isn't really hit. Like Nate said earlier, businesses do transactions through electronic funds transfer. So that's bank to bank. So this is not counted in that. We're talking about third party. So this is why it's so important, because for people, you said, you know what? I'm tired of this job. I'm tired of all this kind of stuff. I want to do my own thing. And you kind of started it. And before, this is something new that's changing. We just want you to be aware because it's a new pain point that you have to be aware of. This is not to discourage you, just so that you are aware. Because here's the thing about it. Big businesses have been complaining about people not coming back to work. They have been complaining. Why? Because you started your own business. You've been handling your business at the house. You're getting your own bills paid. And now when they need you to come back to work, you like, man, I ain't going nowhere. I'm going to be right here, all this type of stuff. So now you got a decision to make. So this is why we said what we said.
I think it's also better though. Sometimes we can adjust. It just takes time. And so that's why we didn't want to come on in March or April when it was already in effect. So we're trying to give you guys some adjustment time to either get your business in order to where you don't have no issues with it, or come up with some other means or ways to do it. Because this can be a business killer, but it don't have to be, like Derek is saying. Right. It don't have to be. We can start doing business the way we supposed to do business, but most of the time we can't afford to. So some adjustments definitely have to be made.
Yeah. So you got to be aware of, and that's the whole point. We don't want you to get to the end of 2022 and you start reporting 2023 and this hits you in the face.
Yeah.
This is all about being aware. We want you to succeed. We want you to push forward and start your business, but do it in a way where you don't get hit with penalties and fees and all this type of stuff on the back end. So this is why we wanted to make sure we brought this to you. And we got somebody who is an expert. They are certified in this. We wanted to get them to talk about it because it's important. Start your business. Do your thing. But just know how the government is looking at you now. When you use the third-party services, the government is looking at you now. They can see certain things that you thought they couldn't see now. So instead of you buying that Benz, you may need to buy that Toyota. So, so you need to think about how you handle your influx of business. So keep that in mind. Well, we're wrapping this up as final thoughts. Nate, what you want to lead the people with? What's some important things you lead people with?
First and foremost, I like to thank Derek and Yogi for bringing me on the show here. Final thoughts. Definitely, as you know, that the new tax law has changed. Now you know what you know. You can make better informed decisions. If you, of course, plan to use your current third-party service organization to process payments, I would definitely reach out to them, have a conversation with them, get an understanding of how they're going to report business transactions, consider the personal transactions. Obviously, you may want to think of alternative methods too, as far as cash and checks and things of that sort, maybe save down on those payment fees too as they process funds. But again, whatever it is, at least you got the knowledge now to make a better informed decision. And just like, again, planning is very important and key. So again, reach out to me if y'all have any more questions or comments. I'll be more happy to help. Thank you.
Damn. It seems like every time we got to come up, they always doing something to bring us down. Damn. It took me 5 whole minutes to understand what they were talking about, because I was conditioned. I'm conditioned to think about, hey, I need this cash out for this. I need this for that. Hey guys, we just got to come up. We just got to be smart about the way we do business. And think about this. We've been doing business like this for a long time. And perhaps it's time for a change, a better change. One that we can be more honest about and one that we can look forward to. You know, because anytime you're doing business the other way, you always got to kind of look over your shoulder. Now the IRS is watching. It's just time for something new. We can adjust. We are people that adjust, so we can just adjust. We'll be fine. Y'all will be fine. Y'all can do this. Delete them apps. That's my final thought. Yeah.
Well, let's get right into it. But it almost feels like an episode of Good Times. I don't know if you watch Good Times, but it seems like every time they made one stride, they get knocked back. But here's the thing you got to understand. Like I said, this is not something to discourage you. Don't be discouraged by this. Go ahead, start your business, do what you have to do, continue your business, just move with more knowledge and more information. We want everybody to continue in the vein that you're in. Nothing motivates you like pain, and they understand that. So they create this pain point for you, so to discourage you. But we have been baptized in pain. We understand pain. We have adjusted to pain time and time again. This is just another adjustment we have to make. So go ahead, make the adjustment, be aware of what you have to be aware of, but keep pushing forward. Do not let anything discourage you from what you feel like you should be doing, what's in your heart to do. Move forward. I think this is going to be something that's just going to make people more aware, and people are going to generate more than they were before. So get out, hustle harder. Just do it like that. Just hustle harder and watch the benefits continue to increase. That's our king speaking. My final thought. Well, gentlemen, I think we may have helped some people tonight. I think we did.
Hey, listen, if we have one person, well, you know, people always say if you have one person, well, that's a lie. It should be at least 100 of y'all, because you should be telling somebody. Dude, listen.
Share this episode. Share this episode.
As soon as I heard it, I started telling people about it. Dude, if we care about anybody, we would tell somebody. This is great information, man.
Yeah. So listen, don't forget, we'll be back January 10th. We're still coming back January 10th. We just had to drop this on you all. So going into, because starting January 1st is when it takes effect. We want you to be aware and don't get caught off guard by things that the government is doing, new things that are being implemented. So we appreciate everybody. We appreciate my man, Mr. Nathan Ferguson.
No worries. Thank y'all.
You the man.
President expert. We're going to catch y'all next year, January 10th. Y'all be good. Peace out.
Yeah.
Be blessed.